Hey everyone, Longacres Finance here with another update on the Quality Dividend Stock Portfolio. This is the second update since starting the portfolio, and it is as of market close on September 21st, 2020. Let's start with the most important part, the performance. If this is your first time watching the series, make sure you check out how I built the portfolio by clicking the link above, and don't forget to subscribe for future updates. The Quality Dividend Portfolio is down 4.92% since it was started on September 1st, 2020. Over that same period, our benchmark, the S&P total return, is down 6.37%. This means the portfolio is beating its benchmark by 1.45%. Not a bad start, but keep in mind it's only been 3 weeks since the portfolio was started, and our goal is long-term outperformance of the benchmark. Here is a screenshot from M1 Finance that shows the value of our holdings, $118.53. The net cash flow, $123.97. A market loss of $5.44 and 15 cents in earned dividends, bringing the total loss to $5.29. There is currently $6.02 in uninvested cash. You can also see the total return shown by M1 Finance of minus 5% differs from the return I just showed you for the portfolio. M1 Finance uses a money-weighted rate of return that isn't ideal when comparing to an index benchmark, so I computed the time-weighted rate of return myself. Here is a cleaner presentation of the assets in the portfolio. And here is the computation for the time-weighted rate of return. Basically, each time a trade occurred in the portfolio, a return was calculated for that time period. Then the returns for all the time periods are combined. If you'd like to learn more about how this works, check out Update 1 in the link above, where I explained the difference between the time-weighted and money-weighted returns and the formula used to compute them. It was nice to finally see some trade activity in the portfolio. It took 8 trading days since the first deposit until the first trade occurred on the 17th. Since M1 doesn't execute trades below $1. That first trade on the 17th drifted the allocation further and triggered the larger trade on the 18th. Let's take a quick look how I computed the S&P total return. The return is computed by subtracting the open price on September 1st from the close price on September 21st and dividing that difference by the open price on September 1st. That's how you get minus 6.37%. Let's move on and talk about dividends. While the main goal is to outperform the S&P total return, this is a dividend portfolio, so the secondary goal is to increase our dividend cash flow over time. I am proud to announce the portfolio has received its first dividend, a whopping 2 cents from Home Depot on September 17th. I know it seems insignificant, but over time I hope to show you how the dividend stream will grow and pick up pace as we move along. This is how I will track the dividends in the portfolio monthly and quarterly. Right now, we just have the 2 cents in September, so there is nothing really to analyze here. I will also use graphs to visually show you how the dividend stream grows over time. This is the monthly graph. And this is the quarterly graph, showing the 2 cents we have received so far in quarter 3. Finally, moving on to something more interesting. This is a projected dividend stream schedule. The first column are stocks that pay in January, April, July, and October, and the estimated dividend income for those months is 11 cents. The third column are stocks that pay in February, May, August, and November, and the estimated dividend income is 15 cents during those months. And the fifth column are stocks that pay in March, June, September, and December, and the estimated dividend income for those months is 20 cents. As you can see, the dividend income stream is quite small and unevenly split throughout the year. These are of course estimates, because I'm not quite sure how M1 Finance rounds dividends on fractional shares. I guess time will tell. Here is a cleaner breakdown of the year. Currently, the portfolio has a forward-looking expected annual dividend of $1.84. Based on the market value of the assets, this equates to an annual dividend yield of 1.57%. Let's move on and take a quick look at the holdings. Sorted by unrealized gain, the 5 best performing stocks are Graco, Comcast, Domino's, Lockheed, and Costco. The next 5 best performers are Accenture, West Pharmaceuticals, Lowe's, Northern Trust, and FactSet Data Research. The middle of the pack are Home Depot, Jack Henry & Associates, Northrop Grumman, Moody's, and ADP. The laggards are MSCI, BlackRock, Visa, Roper, and Mellon. And the 5 worst performing stocks are MasterCard, Fastenal, Microsoft, T. Rowe, and coming in last place, Intuit. That's it. Thanks for watching. Don't forget to subscribe and hit that like button. See you next week.